It's not a bubble. The bubble is in the collapse of fiat currency, not the stock market. So if you look at the stock market versus the real estate market versus gold, they're all pretty much in line. So it's not that everything is a bubble. No, they've made it look like a bubble because the currency is being debased. You know, don't wait for the price to fall. Don't just buy some and understand, as I said, understand it's volatile. Understand you'll feel sick when it goes down a lot, but then dollar cost average, just buy a bit more. Don't leverage. Don't use leverage. Please don't use leverage. Just think of it as this long-term opportunity, the likes of which you've never been given, and just smile to yourself and say, thank you. So if you ever look at the chart of the Venezuelan stock market, it's the best performing stock market in the world and has been forever, but it's not. So here we are today in cryptocurrencies. They've also been around about 10 years. Currently, there's 150 million users, but the network is growing at 113% a year. So it's twice the speed of growth of the fastest technology the world has ever seen. We've never seen anything like this. And what this is the network of money. And it's exploding in size. And so many people are being cynical fighting it. And if you just turn and don't face the wind, put it in your back, you can sprint. And that's the opportunity here.
So markets are all about psychology. And if everybody expects something to happen, it won't happen. So everybody's kind of got in their heads that the cycle finishes in December because that's what it did in 13 and that's what it did in 17. So my guess is we probably have a sell-off and then it rips again because that is the path of most pain. And markets tend to have the path of most pain. Why is it going up right now? Because the institutions aren't in and there's no ETF, so retail aren't in. So the path of most pain is it going up while people aren't in. But the path of most pain would be a bunch of people sell out thinking they're being clever and the market goes up. Why will it go up?
You open that first door, you usually come in a bit cynical, but inquisitive. And then you walk into this new room and you go, wow. And then you think, hey, I've got it. I understand it now. And then you go, well, what's that door over there? You open it and go, oh my God, what's that? And before you know it, it's a maze because you'll discover it's the biggest thing you've ever seen. So to explain this to people, the internet grew at 63% a year in terms of number of users from 1990 to 2000. In 1997, there were 150 million users of the internet. And as I said, it was growing at 63% a year, the fastest growth of any technology the world had ever seen. We all know that. We all talk about the internet. It's a $2 trillion asset class currently as of today. If we look at the other major asset classes around the world, equities, bonds, real estate, they kind of range between 150 and 350 trillion US dollars. So this digital asset, if we just follow that adoption curve that we're looking at, they will get to a $200 trillion asset class, which is, we'll have never seen this happen by 2030. We'll have never seen an asset class that didn't exist come out of nowhere and be worth $200 trillion. So to think of it, what does it mean? Why should anybody care watching this? This is an entire asset class that's going up 100-fold by the end of this decade. It's like one of the easiest ways to make money and prosper is to have a wave behind you, the wind in your sails. This is the biggest wind in your sails you'll ever have. So here we are today in cryptocurrencies. They've also been around about 10 years. Currently, there's 150 million users, but the network is growing at 113% a year. So it's twice the speed of growth of the fastest technology the world has ever seen. We've never seen anything like this. And what this is the network of money. And it's exploding in size. And so many people are being cynical fighting it. And if you just turn and don't face the wind, put it in your back, you can sprint. And that's the opportunity here. What you do when you create an excess amount of something, so let's say iron ore in Australia, if you pull too much out of the ground, demand collapses. I mean, you've got too much supply, so prices fall, right? So if you create too much supply of a currency, and we see it because the banks are hoarding this stuff, the price of the currency falls. Now we grew up in a world where the Aussie dollar goes up against the US dollar or goes down, or the euro goes up against the Aussie, right? That's the relative valuation. But Australia, New Zealand, Japan, Europe, the UK, Canada, the US, they're all printing money. So what happens is the value of all of these currencies falls together. So you're like, well, how can that work? Surely one has to go against another. No, they fall against things of scarce supply. Gold, Bitcoin, real estate, equities. Those are why these things go up so much. It's the value of the denominator goes down, the fiat currency. Think of a comparison and think how stupid it sounds if I said to you, oh, you know, Sydney Harbour real estate's going to go up 100x. And I could pretty much show you how and why, and it was going to happen by 2030. You just do everything you could to buy as much property as you possibly could, or build it, or start real estate agents, anything. When people tell you about cryptocurrency, people are like, well, I'm not sure about that. The government's going to ban it, or, you know, whatever it is, because people fear change. And this is a gigantic change, but it's really exciting. So if you ever look at the chart of the Venezuelan stock market, it's the best performing stock market in the world and has been forever, but it's not. That is priced in Bolivar, but the currency keeps devaluing about 70% a year. When you put it into US dollars, the stock market's gone down a lot. This is what is going on. So the central banks around the world, the G4 big central banks, are printing currency at the rate of about 15% a year. So your hurdle on your investments is now 15% a year, or you're getting poorer. I.e., you can afford less of a house or less investments every year because of this. And crypto is one of the only things that outperforms the central bank balance sheets. So I checked this and looked at real estate prices in Germany against the ECB balance sheet. Flatline. They're the same thing. Well, German real estate looks like it's going up. Swedish real estate, UK real estate, Australian real estate, Canadian real estate, US real estate, they're all the same. What they're doing is reflecting the fall in the value of the currencies created by the central banks creating too much currency. And so many people are being cynical fighting it. And if you just turn and don't face the wind, put it in your back, you can sprint. And that's the opportunity here. So if you ever look at the chart of the Venezuelan stock market, it's the best performing stock market in the world and has been forever, but it's not. That is priced in Bolivar, but the currency keeps devaluing about 70% a year.